So let's get started with some help with the exercises in Chapter 7. So before you start these exercises, you should have watched the narrated slideshow from our publisher's website and reviewed the information in the textbook for Chapter 7. Chapter 7 leads you into Chapter 7, 8, and 9 because you are learning now about special journals. And in fact, you'll be using the sales journal, and you will be discussing and learning about all the journals. So exercise 1 is exactly that. So in your book on page 218, exercise 1 gives you a list of transactions for the month of May and asks you to determine which journal they would be posted in, or recorded in, not posted, excuse me. So just to get you started, May 1st, your transaction was you sold merchandise on credit, and the journals that your company uses are listed up above. So whenever you are selling merchandise on credit, if you use a special journal, that's going to be a sales journal. So to get you rolling on exercise 1, sales journal is your first answer. Now, to continue on, refer to page, I just had it marked, 191 in your textbook, and you pretty much have a definition of each kind of journal and what they're used for. So I think that will help you answer all of these questions, as well as on the learning objectives in the summary of the chapter on page 216, you can get some more definitions of the separate journals there. All right, moving on to exercise 2 at 7.2. Okay, looking at exercise 7.2, your job is to take a look at the transactions for the Outdoor Adventures, a retail business that sells outdoor clothing and camping equipment. Indicate the numbers of the general ledger accounts that would be debited and credited to record each transaction. So you can see number 1 here is completed for you. So let's look it over and determine how we made it to that point. So, in fact, I'm just going to delete those, and we'll look at the transaction on May 1st. So on May 1st, we sold merchandise on credit, and the transaction did involve sales tax. So if we just use the general journal, we would have the same answer if we used the sales journal. So let me make that maybe make a helpful suggestion here. So look on page 193, and let's assume that we did use a sales journal for this transaction because it is a sale on credit, and that's what your sales journal is for. So just looking at that January 3rd and entry, look at the 3 column names of the accounts that you are affecting. So accounts receivable, sales tax payable, and sales credit. So those are the 3 accounts that are involved, whether we use a sales journal or not, okay? So our debit is accounts receivable. So if you'll look back on page 219, accounts receivable is account 101. And then for our credit, we would have sales 401, and we would have sales tax payable 231. When you're making this entry for real, you would be making sure that these 2 account amounts equaled the same amount that your customer paid you in the accounts receivable. Okay? Moving on to exercise 7.3. On this exercise, you're going to just use a sales journal and practice with it. So on May 1st, you sold a tent and other items on credit to Justin Williams, issued sales slip number 1101 for $550 plus tax of $444. Okay, so As you figure out how you're going to enter this one, I like to start with what you're positive you know. So in this case, we know that the tent and other items equaled $550. It says plus sales tax. It doesn't say including sales tax. So we don't know exactly how much the accounts receivable debit is. So we're going to skip that one. We do know absolutely the sales credit is $550. And we know for sure that the sales tax is $44. So now we just need to add those two credits together to get the amount that our customer actually paid. And that would equal $594. Okay, so it depends on how they write the questions, but usually as long as you pay attention to if they say plus sales tax or this amount includes sales tax, you should be fine. So you should be able to make the other three entries there. All right, I'm going to stop here and create a separate movie for the next couple of exercises.